Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Another interesting, fun week in the markets that we've seen comes as no surprise. We had a huge kill last week, and where are we sitting at the beef numbers? Talk that maybe some highest numbers we've seen since last year. We're going to talk about that and what's happening with the supply issues and a lot more on today's episode. As Brad Kooima joins me, he's with Kooima and Varlick out of Sioux Center, Iowa. Let's start out talking highest numbers since November 30th of last year for these beef.
Yes, box beef this morning was the highest it's been since the 30th of November. I guess I just bring it up because I think a lot of folks have been talking about, what has there been demand destruction with $5 gas, the inflation, all the worries of the impacts of that, which are very real, of course. But to give you some perspective, historically, usually one of the highest price times for beef is around Mother's Day, right? First nice weather, first grilling thing. We got Mother's Day, which is a huge beef feature weekend, followed by Memorial Day, followed by Father's Day. Okay. So anyway, in that window, beef was trading in the high 250, like 258 to 262. Coming this morning, we're at 272 on the beef. So I guess I just bring it up because sometimes I think all this propaganda about, poor us if you're the packer, and our demand is we're really worried about it. Demand is great. Don't let them kid you. And it's good for the grind meat too. The hamburger meat is really, really moving, Susan. So, I mean, to go right through the doldrums of summer, and maybe we'll get a little setback. That's could lose a little bit of money, whatever. It was down a little bit today, but I mean, from a general standpoint, demand is alive and well.
Well, and I want to talk a little bit about that because we hear so much talk about inflation, recession, consumers pulling back because of gas prices. Now, it's nice to see gas, around us, $4.15, $4.20 a gallon, but it's not like that all across the country. So how much of an influence is that going to continue to play on these markets?
Well, it's actually below $4 where I'm from, believe it or not. But yes, in California, it's not. You got a great question, and I hesitate to be my usual glib, smart aleck self.
Oh, come on.
Yeah, I know. Yeah, everybody'd be disappointed, right? I'm starting to wonder whether or not parts of this demand is a little less sensitive to recession inflation. Is there a part of the populace that got used to eating ribeyes and New York strips and cooking them themselves? And do they still have some money in their pocket left over from the whole COVID situation, right? Where there was a lot of money thrown around. It appears that has kind of sustained some of this middle meat demand through the deal. And when you usually talk about recession stuff and where people are, budget conscious, which I understand, that actually is where the hamburger side of this thing is really shown. I don't go to the grocery much, but they tell me chicken is about high enough. Pork, generally speaking, is about high enough in relation to the grinding meat. So that hamburger, if you really were choosing to pick up an entree for the family, is very competitively priced compared to the competing meats. So, if we go into something like 2008, which I don't think that's the kind of recession we're going into. I mean, that was devastating, right? Merrill Lynch, Bear Stearns, financial institution after institution going down, and a wreck with the whole housing thing, with that whole lending thing. I don't think we're in that kind of a situation. Hopefully this recession that we're in already, which we are, is milder, and we end it sooner than what that situation was.
You were talking about some huge kills last week. Were those huge kills more to the north versus the south because of the South's tight numbers?
No, actually, I think that the big numbers coming out of the South continue to be a burden on the market, Susan. But yes, the kill at 670, I believe it was revised to 674, is the biggest kill of the year. And I only bring that up because that was such a big talking point that we had there for a year and a half, right? We're coming out of the COVID pandemic. You can't get anybody to go to work, or even when they were healthy enough to go to work, they didn't feel like going to work because they're getting this big free money deal all the time, right? So nobody felt like working. So that's good. First of all, we're showing that the industry has become very efficient with the ability to get cattle harvested. Secondly, packers don't do this for kicks. Okay. They don't have a big Saturday kill where they got to pay extra unless they're selling the meat and selling it very high and selling it where they're making lots of money again. So, those things are very positive. Big numbers, an imbalance of supply, even I would say in Texas and Kansas, still largely due to the fact that the drought pulled those cattle ahead. They weren't able to be on wheat pasture. And so now they're ready now instead of being ready in September and October. So we're doing the right things. We just got to slog along here for a little bit longer and get through this summertime deal.
We have a cattle on feed report, inventory report coming out this week.
Yeah, and for nerds like me, I get a kick out of the inventory report. Comes out twice a year. Gives you a whole list of stuff, including dairy cows and heifers and beef replacement heifers and beef cows and calves. And so here's why it's interesting to me. You remember the 2019 corn deal where we thought that the crop wasn't as big as they thought, and then it took a year and a half, and then ending stocks number was way less. Well, you remember during the COVID pandemic, I sure do, when we were worried about all these cattle that were backed up, 600,000 of them, and I'm not sure they ever really have showed up. So often these reports are about how they revise the last year's numbers. We're going to expect to see down numbers, less beef cows, less all that stuff. We know that has to be. It's just to what extent that they show it. I'm looking forward to seeing what it'll look like on Friday.
Any big surprises that you think might be coming our way on these numbers?
The first number I'm going to grab is the beef replacement heifers. That's what I'm waiting to see catch. When they start to rebuild, that rebuilding phase, so that we don't have to feed every female like we did this year. That is bullish supply side. So that would be the number that I'm hoping we can find a surprise that changes. And that's all contingent upon whether we continue to get rain and they have grass enough to where they dare to hold those cattle.
Well, thanks, Brad, for joining us. That's been the Cattle Call for this week. We always remind folks commodity futures and options involve a substantial risk of loss, not suitable to all investors. And that's the Cattle Call on the Rural Radio Network.